Good morning, everybody. Happy Monday. It's December 1st, 2025. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites. We're coming at you a little bit early this morning. I'm going to be taking Tony out for a little stroll at 8:30, so I wanted to get in a quick Daily Bites before we get this week started, get the new month underway. It's the first trading day of December. It's the last month of the year, of course, in 2025. And markets are up pretty nicely so far in 2025, right? So we have the S&P 500 up about 16.6% for the year. It had a strong week. It managed to pull out a win for November at 0.19%. It was down almost 4% coming into the week, but 4 up days in a row will certainly cure those ills. We had the NASDAQ up a little bit better than that. I'm actually for the week 5%, but down 1.56% for the month. But let's check out the Russell 2000. Strong month, strong week, up 5%, up 1% for the month of November. Dow Industrials up a little bit, not quite as much as the Russell 2000, but also a strong week, up 3% for 3.5 trading days. Not too shabby for the markets to be up all last week. But today, quite a bit of a different story today. Let's take a look at what's happening here. Hold on a second here. Let me bring this back over. NASDAQ and SES futures are down sharply. The S&P futures down about 46 handles. NASDAQ almost 1%, 230 points. Dow Industrials down about 200. It's about 0.5%. Russell 2000 is going to start off in the negative as well too. We're seeing good strength in gold and silver above 57, almost to $58 an ounce. Also strength in crude. U.S. dollar slipped a little bit, and we saw weakness in Japan, but strength in China, Shanghai, and Hong Kong overnight. So what do we have to look forward to right now? Well, let's take a look at a couple of charts here first, right? Always at the end of the month, we like to take a look at the S&P 500 monthly chart to see if we're still in a bull market or we are now in a bear market, or if we're still in a bear market and not yet in a bull market. Well, this is our indicator down here, the monthly MACD. When the black line is above the red line, that's the thick line is above the thin line, it indicates that we are in a bull market, as long as it's been confirmed. And it was confirmed way back here, okay? About 5 months ago, it was confirmed back in June. So regardless of what anybody else tells you, regardless of what the volatility tells you in the markets, you pay attention to the price action, and you pay attention to the chart, and you pay attention to this indicator to see whether you're in a bull market or a bear market, okay? We are in a bull market right now. Plain as day, right? I mean, look at higher highs, higher lows. Some people were talking over the weekend. I mean, I guess they're maybe somewhat amateurish technicians looking. You can always look for a pattern that you want to have happen based on certain time frames. You want to look for a bearish pattern. It doesn't exist on the daily. Maybe it'll exist on the hourly. Maybe it'll exist on the 15-minute chart. Maybe the 5-minute chart. You can always find whatever you're looking for if you change the time frame, but that doesn't set up any consistency for your analysis, right? If you're using one time frame, that's great. Keep using it, and just use others to help back up your statement there. So I like to use the daily charts, right? But when I'm evaluating the whole market in general on a monthly basis, I use the monthly chart. I look at it once a month. I don't look at it. I periodically look at it during the month, but usually I'm only checking this thing out around the 1st of the month, and today's December 1st. So that's real, and I'll stick it away until January 1st, January 2nd, where I'll look at it again and see where we're at. We see there's a lot of space between the black line and the red line. I don't see that's going to shift or change the bull market anytime soon. So we have it until it's over, right? And you can use the bull market playbook until we change to the bear market. And then that's when you open up the bear market playbook, right? So pay attention to what's happening in the price action. Don't pay attention to what other people are saying with their views, their opinions, and what they want to see happen, right? That's the thing. You use technical analysis to actually help you analyze what is going on, the facts in real time, not what you want to have happen, right? And again, we constantly we all want to have that edge. We all want to be able to make money and not lose any money. I get it, but this is a risk-taking game, right? And you have to fight off those urges to will the market to what you want it to be, because it's just not going to happen that way. All right. So the S&P 500 clearly in a bull market here. Let's take a look at the daily chart, how impressive that market was last week, up every single day last week, including Friday, bouncing off this 100-day moving average, which is the gold line right over here. We had a huge down day on Thursday of the week prior, exactly a week before Thanksgiving, and we've been rising up ever since. On lower volume, of course, we talked about that last week. We said do not expect to see large volume prints during the holiday week, especially on Friday with the shortened session. It was only 3.5 hours of trading on Friday. But the trend is the trend. The trend's in place, and it's looking like we could be moving into like a funky looking W pattern here. Let's take a look at that. You can see that here. Not exactly your textbook W pattern, but still, then we get above that old high over here, and the market is going to spurt higher. Okay, we've seen good strength in breadth. Let's take a look at the oscillators over here, and you can see huge shoot up in breadth. We were in the minus 170 range on the NICE. We were down to minus 300 on that Thursday before Thanksgiving for the Nasdaq, and now we're up to plus 235. That is quite a sharp move. Now, a lot of people have been talking about shifting the shift in breadth. Turning into what is called a ZBT or a Zweig, Marty Zweig breadth thrust indicator, right? And that is moving from where the breadth is about 0.4 up to about 0.61 in about 10 to 12 trading sessions, okay? We're really close to that right now. We would probably need a strong up day today and maybe even tomorrow to confirm that signal, but it's not there. It's a very rare signal. In fact, I will show you how rare it is. Actually, let's take a look at my good friend Tom McClellan has some interesting statistics regarding Zweig breadth. You can probably see it right here, and let's see here. All right. So this came out last week, and you can see the last 9 breadth thrust signals: 1, 2, 3, 4, 5, 6, 7, 8, 9, and the last one is in April of this year. All 9 of them called a bottom in the markets for that period of time. Right. This one here. You can see it moved up there, there. Et cetera, et cetera. So all 9 signals were strong, not immediately, of course, but over a period of time. That was a very, very strong move for the market. So listen, you know what? You've got to pay attention to these things. Now, earlier in the month, not only did we not have a Zweig breadth thrust indicator, but we had what's called a Hindenburg Omen. We had several of those printed, about 4 or 5 of those printed in a couple of days. Now, when you get clusters of the Hindenburg Omen, that's pretty negative and bearish on the market. So I don't recall, in fact, Tom McClellan said it as well too, I don't recall ever seeing a Hindenburg Omen followed by a breadth thrust indicator, the Zweig breadth thrust indicator, actually in the same month. So this is rare indeed. We've seen markets moving from extremes on the bearish side to extremes now on the bullish side, and that certainly is an interesting dynamic here. that makes it much more difficult to trade this market if you're swing trading like we are. So we're just taking things a little bit slower right now. We have a week of economic data coming out, ISM, PMI data coming out. We have the ADP coming out. We don't have the jobs report from November coming out yet. It'll be out a week after the Fed meeting. The Fed meeting starts next Tuesday. It'll be Tuesday, Wednesday meeting. They will come out with a policy decision on the 10th, followed by a press conference by Chair Powell. This week we have earnings from names like Credo. This will be on this afternoon. Tomorrow morning, Signet, Jewelers. Big day for Tuesday on technology and with CrowdStrike, Pure Storage, Marvell, GitLab, and then Box and Okta, along with Asana. A retailer, American Eagle Outfitters, will be coming out as well too. Later in the week, Wednesday, we'll have Salesforce, Snowflake, Five Below, Guidewire, Descartes, Health Equity, PVH, Tilly's, a couple of retailers, Kroger, Dollar General, and then Ulta later on in the week as well too, along with Victoria's Secret on Friday. So lots of stuff to chew on this week. Again, we have a moderately overbought market. S&P Oscillator is up rather high today. And, listen, you know what? We've just got to take it slow, keep your protection on. Having some puts on overnight, over the weekend was a good thing, right? You probably didn't think that, after 4 days in a row, why do I need any protection? The market just goes up every single day forever and ever. It just doesn't happen that way. You've got to pay attention to the signals. You've got to be prudent. Take some money off the table when you can. Last week was a great week to take some money off the table. I was preaching it over and over and over again in the chat room, and most everybody paid attention to what I was talking about. And listen, you know what? We just got to be diligent and live to fight another day, right? So I wanted to close with one thing. I will be back obviously on Thursday, but today is Cyber Monday, right? We had Black Friday on this last Friday. Over the weekend, we did some sales for explosive options over the weekend. We had some really great sales, but today is the last day. So if you go to the website, go to explosiveoptions.net. If you're not already in the chat room or in the swing trading service, okay, you can get in for 1 month for $99. It's about 55% off the regular price, right? So if you just go to the website, explosiveoptions.net, you'll see on the front page, you'll see this 1 month just for $99. Today is the last day for this. Okay, we will have we might have some specials coming up later on in the month. I'm not sure. Definitely something for existing members. But if you're not a member right now, I mean, this is a chance for you to try it. Almost for very low risk. $99. You get 30 days of the chat room, 30 days of the swing trader, which is up, as you saw here, 49% on the year. Swing trading, chat room. What more can you want going into the new year? And maybe make a little bit of extra money here with some of the trades that are mentioned in the chat room for your holiday shopping or whatever. But I think it's a good place for you guys to start to be at. It's a great community. We have some amazing people in the chat room, and I really don't think you're going to be disappointed if you give it a try. So $99, that's it for the swing trading and the chat room. All right, that's going to be it, everyone. I appreciate everyone spending a little bit of time with me today. I appreciate you guys all coming in a little bit early with me today. We'll be back at regular scheduled time on Thursday morning at 8:30 Eastern time. In the meantime, Ray Charles, right? There he is. Do the mess around. Have a great trading day, everyone, and I'll see you in the chat room later on today.